Live from Music City, Nashville, Tennessee, this is your motivational, sensational, inspirational, educational, keenly awaited, highly anticipated edition of All You Need to Know About Elliott Wave. How are all of you guys and girls who are here doing? You guys doing good? Jim, what's up? Bill, how are you? Brad Golson in the house. Brian Paul here. Brian! Hey! What's going on, buddy? How you doing, man? Hope you're doing great. I missed you. Hope life, love, and the pursuit of happiness is going good. Jim says doing well, my friend. Good to know, Jim. Thanks so much. I appreciate that. How was everybody today? You guys having a good Tuesday? Any questions, concerns? You guys need anything so far? Brian says very well. Beautiful. Dave Fredrickson in the house. Dave Fredrickson. Hey, Dave. Facile, how you doing? A lot of traders here in the live class. Thanks so much for being here. If you're watching the recording, I appreciate that as well. Thanks so much for watching the recording. As always, you can find any of our information that we teach free of charge if it's taught by me at reallifetrading.com. And you can also subscribe to our YouTube channel, follow us on Twitter, LinkedIn, all that kind of good stuff, all the social media stuff. Patty Garland says, hello, sir, awesomeness. That's way too grand of a title, way too grand. That's not me. That must be Angie. You must be talking to Angie. Well, anyway, ladies and gentlemen, I appreciate you all being here for All You Need to Know About Elliott Wave. The good part is, one of the things I like to do is break things down into the easiest possible instruction regarding and regardless of what it is. And my goal is to help you guys understand Elliott Wave as much as you need to, or I guess as much as I need to. I don't really know that much about Elliott Wave. I'm here to tell you, I'm not the foremost professional in Elliott Wave. There are definitely, without question, those who trade out there and who understand Elliott Wave better than I am. So it's good to know that, just FYI. But I do use Elliott Wave in my trading. And I think Elliott Wave is interesting. I think it's a very, very fascinating theory. It really, the theory to me is actually what is the most interesting. So let me first and foremost just tell you guys who created the Elliott Wave. And again, it is called a theory, the Elliott Wave Theory. And it's a gentleman by the name of Robert Prechter, spelled P-R-E-C-H-T-E-R, Robert Prechter. And he is claimed to have forecasted the crash of 1987. And he also, in a book, he wrote a book called At the Crest of the Tidal Wave, which was in 1995, which publicly called for the end of the great bull market in 1995. So, he was 5 years early, but the market did kind of roll over. Now, I haven't met Robert Prechter personally. I will say, in my personal opinion, that he is a perma bear. That's just my opinion. So if I ever saw him on the street, I was like, hey, what's up, Mr. Prechter? How you doing? Blah, 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 blah. I like Starbucks too. You're a perma bear. Did you know that? That would come up in a conversation. Because he is. Right? He's always looking for, well, I shouldn't say always, but he's oftentimes looking for the market to roll over. And that's because he's made a lot of money doing so. What's interesting about traders, I'll go on just a 2-minute tangent. What's very interesting about traders who make a lot of money in bearish markets, so when the market goes down, is they always look for the market to go down. That's something they always look for. If you link a lot of pleasure with something, you're always going to want to do that. So the traders who make tons and tons of money when the market goes down, they're always wanting a bearish market. That's just how it is. And that's not a bad thing. I've made a lot of money going down. I've made a lot of money going up. I try to be a little bit more neutral in my analysis. If I had to actually say what I am, I'm probably a perma bull, because perma bears and bearish markets in general, bearish markets only last a few years. They happen so quickly, the market just drops and then the market recovers. So being a perma bear probably isn't the best for your account, in my opinion, truthfully, because the market just doesn't go down that often, right? When it does go down, it goes down very, very fast, very, very quickly, very sharply, and only for maybe 2 or 3 years at the most. But it doesn't just drop 2 or 3 years immediately. It just takes a little bit of time. The reason I wanted to create this class is because I do oftentimes tie in Elliott Wave into my analysis. And I want to tell you guys a little bit about Elliott Wave. And again, this is a very, very fascinating theory. But type in a 1 if you've heard me mention or at least talk about in the past how the market is, or a term I refer to, organic. And I'm not the only one who refers to it in this way. There's probably one or two others. One of my mentors, Anne Marie, she's oftentimes referred to the market as organic. And what an organic market really means, well, I don't know the definition of the word organic. Let's look it up. I don't know the definition of the word organic. I don't know. Probably made by humans or created with a specific intention to be healthy. I don't know what the word was going to be. Karen says Foreman Organia. I guess, maybe. Of, relating to, or derived from living matter. Ah, that's a great definition. Good job, Webster. High five, Webster. Of, or relating to, or derived from living matter. So, deriving from living matter. What do you guys think? Yes or no? Is the stock market, is it derived from living matter? And the answer is yes. 100%. Totally. All the stocks that you're trading, the companies are owned by people. They're run by people. They're staffed by people. The products that the company purchases or makes is purchased and made by people. Or they're made by machines who are built by people. Or the stock market is traded by machines or by computers that were created by people. So it really is deriving from a living matter. The stock market is organic. It is a, more or less, you have to think about like you're trading human emotion, because that's what you're trading. And Elliott Wave and something called Fibonacci, which, here's a little hint, I'll be coming up with a Fibonacci class very, very soon entitled the same thing, all you need to know about Fibonacci. I personally want to make trading as simple as possible. Because my life, I like to try to make life as simple as possible. I know that sounds kind of, duh, but I really try to. I try my best to make it as easy as I possibly can. And the reason I say that is because if you make things too complex, too difficult, too hard, too long to process everything, then you're just never going to get to where you want to go. Right? It's almost like if you had a destination, an A to B destination, and instead of taking the road there, you take every turn possible. You make every left turn imaginable, you'll never get there. Or maybe you do, but it just takes a really, really, really long time, right? So the reason I'm saying this is when I say all you need to know about Elliott Wave, all you need to know about Fibonacci, and all you need to know about credit spreads, I'm doing it from a real life trading perspective, in the sense of a real life trader who uses this information. How can they use this information to make money consistently without overwhelming their brain? I know there's a lot of you who are way smarter than I am. Probably, actually, all of you are. I'm the bottom. If this is a graph of intelligence, this is me right there. Okay, that's where I am. You guys are right here. But what I can say simply is I try to do my best to make things as simplistic as possible, because that's how I learn. And I figured, you know what? If that's the way I learn, maybe some of you guys will learn that way as well. So, Elliott Wave. What do you guys need to know about it? It's organic. The theory is an organic theory, and it ties very, very nicely to Fibonacci. And in my opinion, Fibonacci and also Elliott Wave have to deal, and they, well, not have to, but it deals with human emotion and how people feel during a certain move. For example, if you guys are by a pen and paper, I'm not, so I'm going to do my best to draw one. Do an exercise with me really quick. Maybe you can do this on your computer if you can find a pen and paper. But do this exercise for me really quick. And draw a profit chart for a company. Draw what the profit chart of a company would look like over X amount of time. Doesn't even matter. You guys will probably draw it very, very similar. Profit, revenue, maybe I'm not using the wrong terminology, but you guys might see what I mean in just a second. But try to draw for me, if you will, if you own your own business. How about that? If you own your own business, for my business owners, draw in a profit or a revenue or money stream of some form that you receive over X period of time. I'll give you guys about 6 seconds to do that. It shouldn't take too long. And then type in a 1 if your drawing looks like this. Any ones out there? I'm going to draw a one because mine did. And here's the reason I say this. The theory comes from everything in life that's organic works in ebbs and flows. Karen says yes. That's how she drew hers. It works in ebbs and flows. You have ups and you have downs. Relationships, life, your workouts, right? So if you work out, you're going to have periods where you have massive growth, and you're going to have periods where you have a small decline, a small rest. You guys, am I picking this up? Same thing with your salary. If you drew your annual salary from the day you started working until now, it might look something like this, or maybe it looks something like this, or type in a 1 if your salary from age 18 to wherever you are now looks something like this. Hopefully it does. Right? You start out, you're not making much, and then boom, you get a job, you work at a dry cleaners, and then you start waiting tables, and it all just kind of, flat lines for a second, and then it continues higher. Everything in life, then the theory works in the situation that people are tied to this mysterious, invisible force, if you will, that is called emotion. And all emotions are tied to waves. And when I say waves, I actually physically mean electric waves, like physical waves of emotion. Brain waves, all those waves. Things work in waves. The ocean. It's all organic. I'm almost going down a rabbit trail, but I promise I'll wrap it up into trading very soon. Don't you guys worry. Anyone just totally lost? Type in a question mark if you're totally lost. Because if you're totally lost, it's exactly where I want you to be. I want you to be slightly lost right now. But the world, the market, humans, everyone around us, everything that you interact with works in waves of some kind of organic ebb and flow. You give and you take, rest and growth. That's what I'm going after. The market is the same way. You would think it's the same way because it's traded by organic living things, and it is. So in trading, the graph that I just drew for you, the quote unquote, what I call the profit chart. If you had to create how much profit does your company make, how much growth are you expecting over 10 years? This is what's called Elliott Wave's base form. Base form. And base form stipulates that markets, this is a theory. It's going to be a theory pretty much forever. You guys know technically gravity is a theory, believe it or not. Okay? The base form is everything moves in waves of 5 with a correction of some kind, and then a continuation. 2, 3, 4, 5. So Elliott Wave Theory stipulates that there are 5 thrusts. So you have 1, 2, 3, 4, 5. And then you have an A, B, C correction. Everything moves in waves 4. Waves 1 through 5, and then has a correction of some kind. Now, again, there are truly very I can't think of the word. There's a copious amounts of different forms that Robert Prechter and other analysts and his school of thought have created. There's a lot more out there than just this. There's actually tons. But this is the main one. This is the one that began and revolutionized, really, if you will, his trading and how other traders have traded since then in the future. Ebb and flow, they move in waves. So if you're looking at right now the DIA, you guys ready for this? This is kind of cool. If you look at the DIA, this is the ETF that tracks the Dow Jones Industrial. You see this chart that I just drew? I freehanded this. I was just drawing without even noticing it. I'm going to move this on top of the DIA ETF. Check this out. You guys ready for this? What? Look at that. Type in a 1 if your mind's got blown a little bit. I just drew this freehand, but that's what happened right there. That's not that bad. That's not that bad. It really does kind of fit. I mean, there's a few things that are off, obviously, as you can see, but there's a few things that fit there. So in Elliott Wave, when I say all you need to know about Elliott Wave, my goal here tonight and in this recording, if you're watching it as a recording, is to teach you guys to determine what wave we're in or what wave we could be in so that you can trade it and make some money. That's my goal. So what I'm going to do is I'm going to break down these waves, and I'm going to go ahead and tell you right now, I like to start with the hardest thing and work my way to the easiest. Okay? That's what I like to do in life. So if I'm eating food, I like to start with the food that I don't like and then save the food that I do like. So I eat all the vegetables first and then I stay with the meat. So if I'm working on something, if I'm working on a letter or whatever, email or something that I have to do, I do the hardest part first and then I get the easiest stuff done. So what I'm going to do is I'm going to let you know the hardest part on this class tonight. You guys ready? Wave 4 and what's also often referred to as the correction cycle or the correction waves. And that is waves A, B, and C. I'm here to tell you right now, if you can create an idea that you might be in a wave 4 or a correction cycle, that's really all you need. Wave 4. So you go ahead and write this in. I know most people would start with the wave 1, but I'm going to start with the hardest part. Wave 4 is the hardest. Wave 4 often looks like a triangle, pennant, wedge, or I think there's actually 2 or 3 more in here. Give me 1 second. Wave 4 often looks like, one day I'll learn how to spell, a triangle, pennant, wedge, channel, aka a distribution phase of some kind. Some of you watching this or hearing this might not know what a triangle or pennant or wedge or channel is. If you don't, email me, let me know, but I'm pretty sure y'all know what a triangle is. Triangle is a chart pattern. Looks a lot like, a triangle. Boop, 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 boop. If it's a pennant, it's just really, really small. Triangle is big, pennant is small. Other classes of real life trading, you'll learn about those. Wedge, channel, all the same. So that's what wave 4 is. Wave 4 often looks like, or I should put often looks like, or is a triangle, pennant, wedge, channel of some kind. That's the easiest way to put it. Honestly. If you're really, really interested in this, you can go deep. I know 4 or 5 traders who I'm very close with. They're engineers. They're all actually very, very good at Elliott Wave. But they're not the best traders. I love them. I'm trying to do my best to help them, but they get stuck on Elliott Wave. Elliott Wave, my friends, is a great, great tool for understanding the now and helping you create a plan for the future. I do not use Elliott Wave to forecast. I use Elliott Wave to understand where we are right now or where we could be, and it is a simple tool to help me understand and be able to create a trading plan. Type in a 1 if you understand what I'm saying. A lot of traders will use Elliott Wave as a forecasting tool saying it has to work, this is how it has to be, and I'm going to set the trade up this way and it has to work. No, it does not. It's a theory. And you could just be wrong. You could be counting the waves wrong. Or the waves just might be different. That's the thing is, even though Robert Prechter created Elliott Wave, and I've gotten all of his emails really since 2011, he wanted the market and he forecasted the market per Elliott Wave to crash here, 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 and there. Since 2011, he's trying to call the top with Elliott Wave I'm not even exaggerating, 15 different times. The market is absolutely, without question, going down lower than ever, Dow 400, that type of thing. Do not try to forecast the future with Elliott Wave. Simply help Elliott Wave help you understand the now so you can create your trading plan, and that's how you're going to trade the future. Your trading plan, not Elliott Wave. 2 different things. Elliott Wave is going to help you understand the now. Okay, so I'm glad you guys understood that. Got a lot of 1s. Beautiful. Fantastic. So when I say wave 4 is often a triangle, pennant, wedge, channel, or a distribution phase of some kind, that's the easiest way to put it. There is something called flat wedges extended triangles, X waves, X triangles, X pennants, A, B, D, C, E, F, G pennants. There's a G, there's too many to name. You can literally sit down, and I'll go to a daily chart right now on the DIA, now that I have this written down here. We'll go to a daily chart, and there are charts out there that try to count the corrective cycle of the Dow Jones in a distribution phase. If you know it's a distribution phase, you can more or less say, all right, we're in a wave 4 of some kind. Again, the easiest way to put it. But this is obviously a distribution phase. We're going sideways. We're not doing anything on the Dow. We're going sideways. So to try to count each one of these waves and create a pattern, it is just going to drive you crazy. So why don't you just go, all right, we're trading sideways. It's a wave 4. You want to see how simple that is? All right, folks, here we go. Here's Apple. Apple, ladies and gentlemen, what wave are we in on Apple? Don't you have to look at any part of the chart. Just really quick, take a guess. What wave do you think we're in? Bigger picture. Probably a wave 4. Yeah, more than likely. More than likely a big wave 4 because we're in a channel, we're in a distribution phase, we're trading sideways. Let's zoom out just a little bit and see if we can count this. Ready? I'm going to go to a weekly chart. Here's a weekly chart on Apple. Let's see if we can count a wave 4. 1, 2, 3, 4. Done. Is that the best wave count? Is that the absolute ending wave count? Could there be others? I'm getting to that in just a little bit. Don't you worry. But we could be in a wave 4 right now on Apple. I think we are, personally. Maybe we're not. I don't know. But we could be. So, on trading, try to find the wave 4. And if you can understand the wave 4, thumbs up. You know where you're at. You have a general idea. Try to find the wave 5. We'll get that in just a second. ABC correction. That's the other interesting thing. I'll draw another wave count on Apple. 1, 2, 3, 4, 5. Whoa, just flip the script. Jeremy, I thought you said it's a 1, 2, 3, 4, 5. It is. That's 1, 2, 3, 4, 5. It's all about perspective. That's why Elliott Wave is a great way to understand the now. Right? Don't use it as a forecast because it's not going to be right, in my opinion. Just help you create the understanding. So on Apple right now is if we're in a wave 4 or we're in some correction on the ABC cycle. Wave 5, A, B, C. Bounce. So regardless if I'm in a wave 4 or I'm in an ABC cycle, I'm expecting a bounce. I'm expecting a bounce of some kind. Okay? The ABC wave is a very, very tough wave. It's a very difficult wave to find. But it is absolutely useful if you can try to create an ABC, and I'll get to that in just a little bit, don't you worry. But what's the easiest thing to do is go back in time on any chart and try to count and find the wave 3. Ladies and gentlemen, that is how I can sum up Elliott Wave. Try to find the wave 3. If you can find the wave 3 in any pattern, you have a really, really good building block for where you are approximately. And I don't care where you find the wave 3. Well, I do care. I said I don't care. I'm trying to stop saying that. I do care where you find the wave 3, but what I'm trying to say is it doesn't matter specifically what time frame you use, what chart you're using, or how long you're looking to do. I'm going to go to a wave 3 characteristics in just a second, but I very fully believe this is a wave 3, 4, 5, A, B, C correction. ABC correction leading into a accumulation phase, public participation phase, and now we come up to the distribution phase. So if that's correct, this is the accumulation, this is the public participation, that's the distribution, we're in a wave 4 or we're in a correction of some kind. All of those choices lead to there's a good chance Apple moves higher. Type in a 1 if you had a little bit of an aha just then. I'm going to break down the wave 3 in just a second. Lindemann had a 1. Beautiful. So you don't have to necessarily find the wave 3 where you are at this exact moment in time. I'm going to break down what to look for in just a second. But you can go back in time and find it on a bullish market and a bearish market, doesn't matter. And if you find the wave 3, you can kind of understand a little bit where you are in the whole scheme of things. Case in point, First Solar. This was the wave 3, this was the wave 4, this was the wave 5. A, B, C correction. Then we got into a wave 1, 2, 3, 4, 5. Some kind of correction of some kind. Probably still in it. But if you can find a wave 3, it helps you understand where you are in the scheme of things, what to look for, and primarily if you should be waiting on a trade or anticipating a bounce, or if you should just stay out of it. You guys ready for this? Here's the wave 3. Wave 3 will have nice and big candles in the direction of the trend. So if you're looking at a bearish move, obviously it's going to have big black candles. If you're in a bullish move, obviously it's going to have big white candles. Wave 3 is often and usually the strongest wave. Look for gaps and volume. Gaps and volume. That's the key. So wave 3 is often and usually the strongest wave. It is often and usually the longest wave. It doesn't have to be the longest though. Wave 3 simply cannot be the shortest. Wave 3 cannot be the shortest wave. So if you're looking at a chart and you're counting your waves and wave 3 is the shortest, you're doing something wrong. Wave 3 cannot be the shortest wave. It does not have to be the longest, it just can't be the shortest. So it can look like this. 1, 2, 3, 4, 5. That's possible. Okay? That's very, very possible. But you'll see that wave 3 and wave 5, they're about the same length. Would you agree? Yeah, they're about the same length. So I mean, as long as it's not the shortest, it can be the similar, but it can't look like this. So wave 1, wave 2, wave 3, wave 4, wave 5. It can't look like that. That can't be a wave 3. It has to be something else. It has to be a 1, 2, 3. And then this is just something else I'm about to explain in just a moment. So if you can find a wave 3 will have nice and big candles in the direction of the trend. Wave 3 is often and usually the strongest wave, meaning look for gaps, look for really, really good volume. What do you guys think? Type in a 1 if you think this is the wave 3 on First Solar. Per just what I mentioned right there. I think so. Let's go over to USO, ticker symbol USO, which is the ETF, and tell me if you can see a wave 3 of some kind on the chart. Type in a 3 if you can see a wave 3. Yeah, cool, huh? That's how I predicted the bounce on USO right there. And about when USO is about $16, I predicted the bounce on USO. I said oil's going to pause here for a little bit for many, many different reasons. But one of the reasons is simply, this is a wave 3. I knew wave 4 was coming. Has to. Always does. Everyone's shorting. If you look at a chart and you go, oh my gosh, I see so many black candles. This is not the time. This is not the time for me to short. Then wait for the wave 4 and then look for the short. So I think one of two scenarios on USO, we're in the wave 5 right now, or we're still in a big wave 4, turns into a channel, and then wave 5 comes later. That's my thought. We're either in a wave 4 right now, or we're in a wave 5. Depends on what time frame you look at. Let's go out a little bit longer. Let's go to a monthly chart and check this out. Can you see a wave? So this would be a 1, 2, 3, 4, 5. Weird as that sounds, this is some kind of wave 3. Some kind of wave 3 right there of some sort. Let's talk about a few more. A few more rules. So we talked about wave 3. We've talked about wave 4. Let's discuss wave 2. Now, wave 2 is important to understand. Wave 2 is important. Wave 2 cannot go lower than wave 1's low. So we cannot have this. If you draw that, there is something else you're missing over here. So wave 2 cannot go lower than wave 1's beginning. So I'm going to come over here to FEYE, fire eye. And I'm going to go to a daily chart and kind of show you a little bit on the waves. I've actually got fire eye nailed down right now on my wave count. I'm spot on with it. So this should be pretty good. So ladies and gentlemen, I had a trader actually ask me, and there's nothing wrong with this. Again, I was very happy that this trader asked me this question. They just happened to be wrong. That's okay. Can this be a wave 1, 2, 3, 4, 5? And then a correction right there. Can that be possible? What do you think? Yes or no? Can that be a 1, 2, 3, 4, 5? So again, understanding this, I'll give you two aspects of this trade. First of all, I liked the fact that the trader said, man, this is a strong wave. This is a correction. And in knowing that this is a correction, they say, I expected it to bounce. They were right about that. So let's just say kudos to them. They were correct that we were in a correction of some kind. They just didn't get the wave structure right. Is there anything wrong with that? No, I don't. Again, to me, you could call this the Chinese acrobat. You could call this the walking crab. You could call this the hang glider in the sky. You could call this the blonde man on the beach. You could call it the mashed potato dance. Doesn't matter to me what you call it. As long as you can understand, and remember, that's why real life trading, I love this company. I love the mission of this company. Our goal is to make things so simplistic that it's like, hey, it doesn't really matter. The hard nuances do not matter about trading. It's just, hey, call it whatever you want as long as you can understand the concept of what you're going after. As long as you can create a trading plan and follow it, that's all that matters to me. That is the most important aspect. So the reason that it's a no is actually twofold. Number one, the wave 2 that they drew went lower than wave 1. That can't happen. Number 2 is that wave 3 was the smallest wave. Numerically, wave 3 was smaller than wave 1 that they drew. So that couldn't happen. So the wave count, in my personal opinion, is this. Wave 1, wave 2, wave 3, wave 4, wave 5. Wave 2, 3, 4, 5. Type in a 6 if that meets all the criteria that I've described for you guys so far tonight. Wave 3, does it have volume? Yes or no? Yes. Does it have gaps? Yes or no? Yes. Has both of them. Is wave 4 a big triangle type of thing? Yeah, pretty much. There you go. There's wave 4. Is wave 3 the shortest wave? No. So that's good. Is wave 2 lower than wave 1? No, it's higher. And do you see, here's the other cool thing, and guys, be patient. You're about to have a little bit of a breakthrough. Can you see the ABC cycle in Fire Eye? Yes or no? Can you guys see it? Patricia White says yes. Woo! All right. A, B, C. There we go. A, B, C. Patty says it does, but there must be some criteria for wave 1 to determine where it starts. We'll get to wave 1. Wave 1 is the hardest one to predict. That's what everyone wants to predict. I'm just here to tell you it's obviously going to be the hardest because if you can predict wave 1, you can make insane amount of money. Okay? That's the holy grail of trading. Where is wave 1? What I'm here to say right now is this is in my personal opinion, Fire Eye, as it stands, in my opinion, is in an ABC correction. Where does C end? I don't know. That's the part that I don't know. However, can we formulate, based on what we have in front of us, a possibility? And that, my friend, is why I say don't predict with Elliott Wave. Just create a trading plan based on it. So what I mean by that is, here's a resistance. FireEye broke out of a resistance. Now it's old support. It just so happens that there's a wave C that might be ending soon. How low can C go? C can go low. C can go pretty more or less. The theory doesn't specifically say this, but some do and some don't. C can almost go all the way back to 1. C can be big. A, B, C can be very big. If it's too big, it turns into its own wave, which we'll talk about at some point potentially. Bottom line, ladies and gentlemen, this does not have to be an ABC, and then we're off to the races. That's why you don't want to predict with Elliott Wave. That's why you don't put all of your baskets in Elliott Wave. The reason I say all you need to know about Elliott Wave is this is really all you need to know. Understand the wave count, start counting the waves, see if you can come up with a little bit of a conclusion of where you're at, and say this. I could have done all that analysis and said, you know what? We're possibly in a C wave. Earnings is coming up right around the corner. If I get a good gap up on earnings with a good candle and a good volume, ladies and gentlemen, can I go bullish? Yes or no? What do you think? Yes! Woo! Absolutely. Absolutely. So that is the premise of the whole thing is right now is I'm simply letting you know this is a C, possibly a C wave. If we gap up, and I'm not saying we will, but if we do, or if we have some type of really good candle or really good buying volume or something off of this level, we could then stipulate that this appears that it is some kind of end of a wave and that we should be bullish and not be afraid because it matches the wave and it just gives you an extra reason for confirmation. Does that make sense, traders? Linderman says yes. Patty says yes. Great. So that's the thing with wave one. Wave one's the holy grail. Wave. It's hard for me to say. Wave one is what everyone wants. They want to find that. If you can find a wave one, you're doing awesome. You're doing great. So 2 can never go lower than 1. 3, now ironically enough, 4 can go to the 2 low right there where 3 started. That 4 can do that. But again, it can't and really should not go lower. The theory's not as clear on that one, but this is where I would say something is changing. Have you guys ever heard me say that on a chart? When I say if the stock breaks this level, something is changing. Something is off if we break this level. If we break this level, because I'm doing a wave count, I'm like, we shouldn't be breaking this. This looks like a 1, 2, 3, 4. We should be bouncing here. This should bounce. So wave 1, 2, 3. 3 can go as low as 4, and then you can have a 5. 5 could go as high as wave 4 is high, as long as you can count it out, and then we can have an ABC correction, and then all of this can be, you guys ready for this? A bigger wave 4 and a 5 pattern. Ladies and gentlemen, welcome to the world of fractals. This is all Elliott Wave and Fibonacci. They tie in very, very well together. A fractal is a mathematical, and this is my definition of it. A fractal is a mathematical repeating pattern that is the exact same size. As it gets bigger and as it gets smaller, it's the same image both ways. In and out. Like a snowflake. Okay? You have one snowflake and then you zoom in, you get more snowflakes, and you zoom out, all more snowflakes. So that's what a fractal is. So when I say a fractal, Elliott Wave works, you guys ready for this? This might be a little scary, on all time frames. All of them. It works on all of them. Works pretty well on all of them. So you can really start syncing up your trading then at that point. That's honestly, this is how I get some of my analysis really spot on. Is I'll look at a bigger chart pretty quickly, and I say to myself, okay, this is a C wave. We're about to bounce. Let's say FireEye gaps up to here tomorrow morning, just a guess, probably won't, and then I miss the trade and it runs up. So let's go into an hourly chart and check this out. Here's the hourly. Stock gaps up to here. What wave do you think that would be, ladies and gentlemen? If you had to look at the hourly chart and take a quick guess. What do you guys think? So it gaps up, runs up to here. What type of wave would that be? Probably a 1, 2, 3 wave. Now, granted, a lot of people will say, well, Jeremy, I wouldn't buy here anyway because it's too extended. I know. You don't want to buy the top of a wave 3. I get it, that it all comes together. You're like, well, Jeremy, this is just very simple. You say retest gaps. I know. This is a retest gap. It's a white candle gapping up, so play the bounce. Because that's what's going to happen is this will turn into a wave 4, and then we play the bounce. So 1, 2, 3, 4. This is where we begin to buy somewhere on the pullback, and it's a wave 5 on the hourly chart, which if we go to the daily chart, would possibly be the beginning of a wave 1. And that little pullback that we talked about, that wave 4 on the hourly chart that I just mentioned, right? The little wave 4 that could happen, that could be the wave 2 on the daily. So we could have a 1, 2, 3, 4, and a wave 5. And we get back up to this high, and then you're done. Then it could form into another big wave, or it could continue higher. That's the part about Elliott Wave that you're never going to know. So the gap could be, we look at it, so wave 1, the pullback would be a 2, and then you're looking to buy, and you would try to hold on to that for as long as possible. So if the stock gaps up, right, could it be a wave 2? And the answer is yes, it could. The open itself could be the 1 wave. If it gaps and it trades down that day, that could be the 2, and then you could expect a wave 3. So when you guys are saying, does the gap count as the wave? Yes and no. I know that's kind of annoying, but it depends on what the gap does. So if the gap opens here, you look at the hourly charts and you go ahead and you analyze the hourly levels. You just like normal. Black candle here, white candle, it's gapping up. You're looking for a retest anyway. So I can go ahead and tell you that the gap would be a form of a wave 3. The question becomes, does the gap trade down or does it continue higher? How far does wave 3 go? Based on this hourly chart right now, the answer is yes, the gap counts as a wave. In my opinion, it counts as a wave 3. Doesn't matter if it opens here and continues, or if it opens here and continues lower, that would be the 3. And then whenever it retraces, I would look to buy on the 4. Type in a 1, if that makes sense. So it's all in the same and it's all different, right? You have the candles just like everything else. The analysis is the same. I can trade with just candles and nothing else, but in my mind, I still see some waves. Right here, 1, 2, 3, 4, 5. How do I know that's a wave 3, ladies and gentlemen? How do I know that's a wave 3? Volume, gap, the length, the size of the candles, boom. So here's the part again. You guys ready for this? That's a 1, 2, 3, 4, 5, which means this is probably an ABC. And then that gaps up as a wave 3. So it definitely, if it does gap up, very, very good chance it pulls back. And then you buy the bounce. Boom, 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 boom. Looks nice. Karen says, I'm confused a little. You're counting waves up or down because this looks bearish on the 60. I think I just answered your question. All right, this could be an ABC. I mean, really, it's pretty sideways, but this is definitely a wave 3 right here, in some form or fashion, on some level. So wave counting just takes a little bit of practice, that's for sure. I mean, just you got to see it, but the volume and the gaps and the candles is the way you can find a wave 3. So if you come in here to the hourly chart, back to the hourly, this line in red, here's the hourly chart. In my personal opinion, this is a bearish wave 3. This is a up wave 4. This is a bearish wave 5. This is the 1, 2, 3, 4, 5 down. And then we have the ABC correction right here, so waiting for the C. Karen says back in sync. Perfect. Perfect, perfect. But in the same instance, right, guys, if the stock gaps open above here or trades above there, do you agree that that is a strong and a significant resistance? Yes or no? I think so. I think it's a pretty strong resistance. So if the stock breaks that resistance, then we would imagine that this ABC correction that I just drew in here, 1, 2, 3, 4, 5, ABC, if it starts breaking that resistance, we'll actually start turning into the 1, 2, 3, 4, 5 that we anticipate. So it's all about, does it break support and resistance if an ABC becomes a longer 1, 2, 3, 4, 5 on the way down? So here's your, and I know there's going to be a lot, most of this is going to be answered with Q&A at the end. But here is your wave 5 up, in my opinion, A, B, C. This is the support. If this support breaks, ladies and gentlemen, this is the main support on FireEye. If that breaks, I will then start counting this as a 1, 2, 3. And what will I look to do? 4, 5. I'll look to short it on the 4 and trade the bearish wave 5. The cool part is, here's the part that's amazing. I don't know which one it's going to do. I have no idea, unfortunately. I do not know what level, how it's going to work. It kind of is going to depend a little bit on earnings, but I can create a plan for either one. And that is the takeaway from this class. Regardless of what I teach you, I'm going to say that every single time. Learn from the past, understand the present, and create a plan to trade the future. Because you can't make money from the past, you get emotional in the present, and you make money in the future. That's just my view of the stock market. That's how you should set up your trades and live your trading life every single day. Past, you learn from. The present, don't trade it. You're getting emotional. Don't trade it unless you've planned the future. If you plan the future and the trade comes to you, pull the trigger. I don't care if it's a 3 minutes in the future. It doesn't matter. Just plan it for the future so that you're ready. Linderman wants me to do a wave count on the 15-minute for FireEye. Oh, Lindy. Too easy, bro. Too easy. 1, 2, 3, 4, 5. A, B, C. The C is a 1, 2, 3, 4, 5. A, B, C, and or a 1, 2, possibly getting to the third depending if it breaks the high. What do you guys think? Does this work? I know it's a little bit of a stretch over here, but do all the rules work? Yeah, wave 3, you have big candles, you have good volume. Wave 5, it can be an absolutely strong wave. Wave 5 is a strong wave, guys. Wave 5 can be strong. It can be a very, very strong wave. Now, in case you have a hard time figuring out a wave count, here's one other little tidbit for you. Wave 3 and wave 5 can have extensions. Now, what does that mean? Well, if you're having a real big, difficult time coming up with a wave count, Patty said, I can call you. Yeah, you can do that. Or try to see if there's a wave extension that looks like this. Well, I didn't quite draw that right. Hold on, let me try again. 1, 2, 1, 2, 3, 4, 5. So you can count this the same way, 1, 2, 3, 4, 5, correction, continuation. Or you could count it 1, 2, and all of this in red is a 3 wave. And it's a 1, 2, 3, 4, 5 inside of a wave 3. So just in case your mind isn't blown enough, when I say there's fractals, there are waves inside of waves on top of waves. So a wave 1 can be comprised of a 1, 2, 3, 4, 5. A wave 3 can be comprised of a 1, 2, 3, 4, 5. A wave 3 can be comprised of 1, 2, 3. Everything can be built on top of each other, so on and so forth. So let me show you. You guys remember how I said this is a wave 4 and this is a wave 5 on a bigger time frame? If you zoom in, I think this is a 1, 2, 3, 4, 5 of a wave 5. Now to zoom in even farther, still on the daily chart. Still on the daily chart. This is where it gets fun. Wave 1, you have a wave 1 extension. 1, 2, 3. Wave 2. 1, 2, 3, 4, 5. This is a wave 3 extension. 1, 2, 3, 4, 5. I know. Guys, trust me. Elliott Wave goes much, 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 much deeper. much, 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 much deeper. All you got to do, in my personal opinion, is do your best to find a wave 3. Wave 3s are easy. If you can find a wave 3, you can probably piece together where the other waves might be, and from there kind of come up with a conclusion of where you are. And if you can come up with a conclusion of where you are, you can know and have an idea of what to look for. Give me another stock and I'll try it with another stock, my friends. Any stock. Any stock. Pick a stock. Any stock. Come on down. Pick a stock. Amazon and Fitbit. Karen. I don't mean to laugh at you, Karen. I can laugh at you at this point because I met you. I think you're tired. I think you've been tired today. Did you get some sleep last night? Karen said I laugh at myself. Some of her tickers that she typed in today, I would only know because me and Karen, we've known each other at this point. Otherwise, I'd have no chance. Here's Amazon. So I'm going to do this. I'm going to challenge myself, actually. I'm going to go to a monthly chart. Then I'm going to go to a weekly chart, then a daily chart, then an hourly chart, then a 15-minute chart. Let's go ahead and just practice counting some waves, okay? 1, 2. Now this is the hard part. Ladies and gentlemen, yes or no? Can this be a wave 3? Yeah. Karen said with an extension. It probably is a wave 3. The reason I say it probably is a wave 3, I don't really see any good pullbacks in here. There's a pullback here, there's a pullback here. Now, I'll go ahead and count all of them that I could see. So you have a 1, 2, if you did this, 3, 4, 5, correction. If you did that, where would wave 2 be? And that's the part where everyone's going to kind of argue, and not you guys specifically, but this is the whole Elliott Wave Theory. Wave 2, I mean, you don't really see a solid wave 2 in here anywhere. You kind of see a 1, 2, 3, which makes this a huge wave 4 on the size of that small wave. I've practiced this a lot, this whole drawing thing. And if you wrote that to me and you said, hey, Jeremy, we're in a wave 5, I would say, yeah, probably are. 1, 2, 3, 4, 5. There we go. We did the exact same thing. We came to the exact same conclusion. So a pullback does need to be, and that's a very good question, Karen, a pullback usually is of some minimum percentage. Usually it's a fib number. I'm not going to get into fibs tonight, but this is about 38% of this wave or 12.8% of that wave. This is about 38% of this wave. This is about 38% of this wave. So all waves should pull back approximately to a pretty solid fib number. Okay. So if I'm counting my wave on Amazon, I would say this is a 1, 2, wave 3 extension, 4, 5. And I would count this as a 1, 2, 3, 4, 5 wave 3 extension. In which case wave 1 is the shortest. And it works. It fits all the rules. Could we be in a 1, 2, 3? Could we make that argument? What do you guys think? Yes or no? Could that argument be made? Yeah. Yeah. It could. It could be. That's the thing with Elliott Wave. Pretty much, if you can count a wave count and all the waves make sense, you can make the argument for it. So bottom line, it doesn't matter if we're in a wave 3 and it doesn't matter if we're in a wave 5 because both of those waves have a what coming after it. Both of them. Both of those waves have a correction of some magnitude coming after it. Type in a 1 if you agree. Wave 3 and wave 5 have a correction after it. So it doesn't matter which one you say we're in. I would say, all right, cool. You call it a kettle. I call it a pot. You call it a pop. I call it soda. There's some kind of correction coming in, and buy the bounce on that correction. Doesn't matter if it's a 4 or if it's an ABC. Doesn't matter. Buy the bounce. Okay. So there's the monthly chart. Here's the weekly chart. So again, let's see if we can do some wave counts on a weekly chart. We don't have to go back that far. Let's just go back to 2009. That's good enough. So 2009, let's see if we can find a wave 3. That's my goal. My goal, I think this is a wave 3. I think this is a wave 3. I think this is a wave 3. And I think this is a wave 3. All wave 3s of some form or fashion. And I think this is a bigger wave 3. Would you guys agree with that so far? So again, wave 3, just more or less find a really strong wave. Good candles, good volume, good move. And when you do that, you can kind of 1, 2, 3, 4, 5, correction of some kind. 1, 2, 3, 4, 5, correction of some kind. 1, 2, 3, 4, 5. Boom! It works. There we go. And then this would be a wave 4 of some kind. And then we would currently have, right now, a wave 1, 2, 3, 4, 5. So personally on Amazon, are we in a wave 5 of wave 5? Probably. So Tina said it seems easier to see after the fact. It is. That's the thing with Elliott Wave. In hindsight, it's almost 2020. So if you can find, I mean, right now, this is current sight. I really do think we're in a wave 5 of a wave 5, and I think there's going to be a little bit of a correction coming on Amazon. Not massive, and I don't trade corrections very much, but once I know a correction's coming, that means, hey, be really patient. This is how I know, in case you guys are wondering, I say I know. This is how I predicted back here that Amazon would hit 410 and then 452. And those of you who have been around with me since I don't know, since 2014, 2013, you guys know that I called Amazon after that gap. And again, I did not know this was a wave 4. I was like, it could be a big correction. Here's what I knew. Let's go to a daily chart. And I got videos approved if you're interested. Once this gap occurred, I said Amazon's going to 407 before this year. No question. Why? Why did I say that? Why was I so confident? Because if you go out bigger picture and you say to yourself, okay, these wave counts are, really getting pretty close and I can see what's going on. It's breaking this resistance right there. That's a major resistance. Once that resistance got broken, I said to myself, okay, this is a big, big wave 4 on some level. Therefore, I imagine that there's going to be a 1 coming. Here is on a daily, 1, 2, 3, 4, 5. Correction. 1, 2, 3, 4, 5. Correction. So on a daily level, I think we're in a wave 4. We're going to bounce. The bounce will probably bring us to the end of the wave 5. And then we'll have a bigger correction. Now, again, could I be wrong? Yes. But what I'm going to do on Amazon, and again, for all those who are here in my trading room, and if you're not, I would highly encourage you to be. It's incredible. All the day traders and the swing traders who are in there, they make a group of the most incredible traders on the planet. We base our analysis on this, and we create a plan, and we follow it, right? I'll do Elliott Waves as much as you guys want me to, anytime you want. So, could this happen? Boom, boom, boom. Yeah, absolutely. Because now it's just a wave 5 extension. So, All we got to do is just come up with a plan and follow it. Elliott Wave is a great piece of the puzzle. I really had a very strong opinion that this was a wave, a correction wave of some kind, and I was not trading this directionally. We were doing bull put spreads and iron condors that entire time on Amazon and destroying it. Amazon is one of the stocks right now I personally feel like I'm tracking very, very well. It's going to humble me soon. It always does. All stocks do. But on Amazon, as far as my cred spreads, I think I'm like 28 for 28 since February. On my credit spreads. Not counting day trades and swing trades, but just on my cred spreads, I haven't had one go wrong since February. I'm going to get one wrong soon. It's just going to happen. But I'll mitigate my risk. That's the cool thing about Elliott Wave. And that really is, in my personal opinion, all you need to know. Now, I'm going to be pleased to help answer any questions that you guys might have. Go ahead and throw out any questions, because a lot of the Q&A and the best part of learning Elliott Wave is you guys just ask whatever questions you have. Karen said, so what's happening now on Amazon on the 60-minute? Here is the hourly chart. And the 60-minute... Okay, if I had to count a 60, we're going to say that this is a wave 3 or a wave 5 of some kind off the bat. So I'm going to go with 1, 2, 3, 4, 5, correction. 1, 2. Small wave 3 coming at some point. So again, anticipating a bounce, not breaking this low. That's one plan. Second plan is we have a 1, 2, 3. This is a wave 4. Again, anticipating a bounce that could come down as far as this low, but should not break this low. And then I could also see a 1, 2, 3, 4, 5, A, B, C. And again, at some point on the C, anticipating a potential bounce. So pretty much all the analysis I have on Amazon is pretty much agreeing with the fact that we're going to have a little bit of a pullback and then we're going to bounce at some point. So when that bounce happens, I'll be ready. Or I'll be watching it. Tina said, so correction in August, Christmas rally started September last year. The Santa rally last year really started in late October on most stocks. Patty says, can you show a 5-minute chart? Oh, Patty. I can do 5. Five's a little bit tougher, but I can get kind of granular on the 5. On a wave 5, you've got to see bigger, a little bit of a bigger wave. So here's what I mean by that. On the 5-minute chart, this is all the data we have on Amazon. So we have to anticipate or guess that this is a wave 1, 2, 3 of some kind, 4, 5 of some kind of right about now. Wave 5. 5-minute time frames. You still have to, again, kind of soak in the bigger picture, because on wave 5, minute 5, 3, 2, 1, things break down a little bit. They still work, but they do break down just a tad. For example, this could be a 3, 4, 5, and this could be the ABC correction, and this could be a 1, 2, 3, 4, 5 ABC. 1, 2, 3. You see what I'm saying? So I don't use Elliott Wave that much on the 5-minute charts. My 5-minute charts are more or less where I'm day trading, where I'm entering and exiting, and I definitely could say, looking at this, I would say, all right, this is a wave 3 or a wave 1. This is some kind of bearish wave down. This is a retracement into this level. I would have said, if this resistance doesn't break, I'm okay going bearish right here. So now that this wave is down, we got to the same low. This is probably an ABC. And then a bigger time frame will kick over and it might roll down just a little bit lower. Does that make sense, Tina? Hopefully that helps. So again, 5-minute, 15-minute, I can get a little bit better. Hourly, I'm pretty spot on with. The 15-minute, again, I think this is a 1, 2, 3, 4. Yeah, I still say we're in a wave 5 of some kind of rough 5 wave. Cool stuff, huh? So, ladies and gentlemen, I mean, again, you take a few small pieces of Elliott Wave and understand. You understand that it's fractal. You understand that wave 3 and wave 5 are very, very strong waves. You understand what comprises a wave 3. Understand it can work on all time frames. Understand that a 2 can't go lower than a 1, and a 3 can't be the shortest wave. And you can really start building a pretty good set of waves. And again, just simply understanding where you might be. If someone emails me a chart on their Elliott Wave, you go, hey, Jeremy, what do you think? And the waves look right to me, I'm going to say yes, because Elliott Wave is hey, it looks great. It's phenomenal in hindsight. It works very, very well in hindsight. It does not work good in current sight. It works to help you create a plan so you can trade the future. That's how you make money. Good deal? Any questions? Any questions? Patty says your cursor should look like a surfboard. Yes. Yes. So you got some things that you want to ride some waves. Want to ride some waves. I gotta have more questions than this, I'm sure. When we talk a little bit more about Fibonacci, that's where you guys you fall in love with this stuff and you probably can never leave. You start doing a little bit of fibs in here and you say, oh, look at that. How interesting. Boop. So once we gapped above the 2, look, guys, look at this. Look at this. Look at this. Look at this. The high of Amazon was at the 2618 of the wave that I just threw on there without any. I mean, seriously, if I sync this up, it's going to go. Look at that. Oh, dirty. Dirty! It's so good. I'm in love with the fib. I like it. I love it. If you like it, then you should have put a fib on it. Whoa. So anyway, fibs and waves, they do blend in very, very well. So again, I can say that if Amazon starts breaking this low, we probably will bounce a little bit, which would bring me to what I just talked about earlier. Then we have a little bit of a rollover, and then we should bounce. Here. Well, now now that this wave is intact, you do a little bit of a retracement from here to here, and you should be able to find out where we'll bounce. So we should, Andrew's pitchfork, I have no idea. No clue how to use it. So we should right about there. And 5.1635 is probably where we're going to hit at some point and likely bounce off of that. And if we break through there, I'll go interesting. We shouldn't go lower, I do not think, than 480. If we go lower than 480 on Amazon, I just got to rethink everything. Patty says, will that class be next week? It will be soon. It actually might be next week. I gotta check my calendars, but you guys will get an email on it for sure. Don't you worry. I do already have a Fibonacci class created. It's already done, but the newest one will be very, very soon. Any questions, ladies and gentlemen? You guys good? That's it? All right. Well, you're probably going to have some weird dreams tonight. Elliott Wave invokes that. I know it sounds kind of very cryptic and astrological, but it's true. You start seeing waves, you probably will have some pretty strange dreams tonight. Anyway, very interesting stuff. I love trading. I love you guys. I love doing what I do. Thank you so much for allowing me to do what I do, which my mission is to enrich lives. And you guys are living proof that people enjoy trading as much as I enjoy teaching it. Thank you for being here. You guys are amazing. I appreciate it. Spread the word of real life trading. Like us on Facebook. Follow us on Twitter. Tell your friends, your family, other traders from around the world. Bring them into the real life trading family. We're an incredible community. You guys absolutely rock. I'll see you later. And until next time, remember, love life, live life, and trade it. See ya.